We're getting ready to do our taxes. It's almost April 15th of 2010, so we're on our 2009 tax return. There's a couple of items that might cause trouble for you that are new or fairly significant in the 2009 tax law. One of them has to do with gifts to charity. The government is much more conscious now that you get a receipt for almost every contribution that you make. There used to be a materiality number below which you didn't need to keep a specific receipt. Most of those are gone. It's almost like you can't take the deduction without the receipt from the donee. And so if you don't have them yet, make sure you contact the charity that you made the gift to and get that documentation now. Another issue that comes up is the pressure somewhat from Congress to convert your traditional IRA into a Roth IRA. The Roth IRA means that you'll never pay tax on the investment income ever again, at least until there's a budget crisis of one sort or another. But converting from traditional to Roth IRA is a taxable event. You pay tax on the whole principal that you convert, and that can be expensive. To me, the only way this makes sense is if you think you're in a much lower bracket this year than you will be in the future. For instance, you're going to get a raise next year, or you think the tax rates are going to go up next year thanks to Congress and Obama and the deficit, or you're subject to the alternative minimum tax. Look at that one closely. Don't give in to a Roth IRA conversion too quickly. And mentioning the alternative minimum tax, many of you might be subject to that tax. It's a flat tax. There's not many deductions allowed against it. It's a lower rate. It's only 26 or 28%. And in a state like Ohio, which has high state and local taxes, you're likely to get caught up by this. Or if this is a year that you exercised incentive stock options or had some other transaction that triggers the AMT, you might be in for a surprise when you file your return.